Hello. Yep. Yeah, instead of listening to an executive talk about the results, like, I don't know, we stream that a lot here on this channel during earnings season, right? We've had Apple on, on this stream. I think we've streamed Amazon calls. We've streamed a lot of these analyst calls. The thing that's been noticeable about GameStop, even for the past 2 years, is when they did have a conference call, there was no Q&A. There was no analyst Q&A. There was no shareholder Q&A at all. So the company has had this history of being very standoffish. I would say in the Ryan Cohen era. So he became chairman of the board in January 2021, right? Then everything happened. he got his he kind of put his whole team together, and he hired Furlong from Amazon to be CEO of GameStop because he didn't want to be CEO. He was an activist investor. He was chairman of the board. Uh, GameStop just hates calls now. Yeah, I guess that's true. But for the transparency of financial reporting, I think earnings calls are super important. We only get information from these companies, like true actual results, 4 times a year, unless they're providing an intra-quarter update, which GameStop rarely does. Companies do provide updates when there's like a material difference, right? If they announce an acquisition, or if things are so bad that they have to pre-announce a sales miss, which we saw. I think Samsung did that earlier this year. So it's uh what I think is kind of interesting is the news out of GameStop today, right? What we got is an earnings beat. Now, I say earnings, I should put quotes around it because they still lost money, but they lost less money than anyone expected. The Whisper number was super bearish. It was 17 cents per share loss that was expected. And the analyst expectations were for a 14-cent loss per share. They came in at like 3 cents per share loss. And it's largely due to them cutting costs kind of across the board at the company. But the other thing I did notice, they have increased their stake in U.S. Treasury bills, or marketable securities as they're called on the balance sheet, to $300 million. So their cash balance decreased to, I think, around $915 million, but their Treasury holdings are now $300 million. If they're whatever you want to call it, CDs, Treasury bills, whatever they're calling marketable securities, it's now $300 million. That's actually, I'm not surprised to see that, because in this environment, uh, with the Federal Reserve raising interest rates right now, short-term interest rates are actually higher than long-term interest rates on the Treasury yield curve right now. It's what they call a inverted yield curve. Uh, it's a sign that of bad things to come, honestly, for an economy when the government has to pay over 5% interest just for you to loan them your money for a month. They're paying you 5% to do that right now. It's hard to get that kind of return anywhere else. So it makes sense for a company that has a lot of cash and very little debt, at least long-term debt, to do this. One thing that they announced when Ryan Cohen was named executive chairman last quarter, which they also didn't have a conference call, was that he would be in charge of asset allocation at the company. I think what we just saw with this increase in the Treasury holdings is a sign that he is in charge of that now. The other data point that we had I think it was just a few weeks ago, the CFO quit. Now, you could set your watch by an executive quitting GameStop these days. They come in and out all the time. The CEOs, CFOs, uh, they kind of come and go at GameStop. So that's not that surprising, but it does. My opinion is that Ryan Cohen is not happy with the performance of the last year, which was all about digital assets, crypto, the pivot to GameStop wallet, the NFT marketplace, which they didn't really mention at all. They mentioned it in their 10Q form with the SEC. They said, once again, NFT marketplace revenue was not material to results. So it's not even a line item on their income statement. And I think we now can say, after a few years of this thing, we can say that this was a horribly timed pivot to the crypto market. By the time NFT marketplace launched for GameStop, the NFT market had already collapsed, which we all know it was super rational when people were buying pictures of monkeys for $500,000. But yeah, GameStop kind of came in right as that fervor was dying, and now we see a lot of different regulators kind of circling the crypto industry, trying to define. They're trying to define crypto assets as securities, and if they do that successfully, the SEC gets to regulate all of these different markets. The whole point of this was to decentralize a financial market, and now the SEC is kind of coming in and saying, no, we're going to regulate you. So that whole argument, I think it was a bad decision on the part of GameStop, and they spent nearly $500 million, maybe more.
Yeah, it was a big investment. Yeah.
You know, they raised like $2 billion about 2 years ago with that share offering. They have spent about $600 million of that, maybe even closer to like 800, depending on stock options and stuff like that. So that is not great at all. What is pretty good here is that the company beat. They saw growth year over year in hardware sales and software sales. But when you think back on the quarter that they just had, we had Tears of the Kingdom come out. We had Jedi Fallen Order come out. PS5 is selling well. And so did the Switch. Switch actually had one of its best quarters in a while, largely due to the Tears of the Kingdom Switch OLED special edition, right? Because, you know, we're in year 7 of the Switch, and Nintendo's just like, I don't know, let's make a red one. Slap Mario on it. So they're doing that. They're seeing some success with that. And GameStop is one of those places that people go for hardware still. You know, it's like, for me, I have no religion when I'm buying hardware from a retailer. It's who has it in stock. And I have an intense distrust of Amazon when it comes to them fulfilling my order in time. So I don't really like pre-ordering consoles from Amazon. I would rather I go to the same GameStop that I used to go to when it was a Funko Land like 30 years ago. And I got my PS5 there, I got my Xbox Series X there, and I got my Switch OLED there. It's just more out of habit than anything, I think. But I still think that physical stores need to exist for video games. I'm not saying that GameStop is going to be the penultimate one, but I do think that we need video game stores. Like we need comic book stores. Like we need collectibles stores or geek culture stores. Like I think there's always going to be a place for that. But there were 5 years ago or 10 years ago, there were too many GameStop locations. And there probably still are. So we've seen that contraction. We've seen GameStop's percent of revenue that was used game sales. We saw that go from 80, 90% to now 30%. They don't even disclose it anymore. And this was a used video game retailer. Now they don't even tell you what percent of their sales are coming from used anymore. We saw Ryan Cohen even tweet about the need for physical media in games and how important it is. Just this weekend. So yeah, it's been Donovan in chat saying that GameStop now does same-day delivery for certain products. I have used that before. Like my controller died one time and I got an Xbox controller sent to me same day. I think that there's still going to be a place for video game retailers in this digital world going forward because we're still going to have hardware. But the problem is, and this is what gets back to what happened this quarter, they beat on revenue and they beat on a smaller than expected loss, but they're not profitable still. You know, and that's the key here. Everyone likes Everyone likes to think that we can just buy this stock and sit on it and it's going to go to the moon. That's not how this works. Short squeezes require actual fundamental reasons for the short positions to be closed. And if the company's fundamentals aren't there, it doesn't matter how many shares you directly registered with ComputerShare. I've been a part of several short squeezes my entire life. I've never had to directly register my shares with ComputerShare. I'm not going to argue with people that DRS is good or bad. I'm just saying that that is not what will cause the short squeeze. What will cause the short squeeze is actual change in the fundamental results at GameStop. And we're kind of seeing that here, kind of. But even with a beat, they were not profitable. And they do have a finite amount of money right now. If you look at the cash and equivalents, it's around $1.2 billion of liquidity they have.
Yeah.
But they need to stop losing money. And, you know, we saw a few quarters ago, they had a positive free cash flow quarter, and the stock reacted super well to it, because that's the thesis of the shorts right now, is that they're going to run out of money, and then they won't be able to fulfill their debt obligations, which are very small relative to where they used to be. They don't have a whole lot of long-term debt. They do have some current liabilities, but they have enough cash to cover that. So it's like, the real thing that has to happen here is a fundamental change in their results. Not that we just sit here and pray that if we all directly register our shares, that it's going to go to the moon. And I just think that's like a really big mistake that a lot of people are making here. And I'm not saying that it's like, I think here's one thing I will say about DRS. If by some miracle we were able as shareholders to directly register more shares than are outstanding in the company, like it's around 300 million. Let's say that we directly registered 310 million shares. We would prove that there are more shares out in the world than is properly being disclosed by broker dealers or market makers or the regulators. We never got there. It's about a fourth of the company that's directly registered right now. It's somewhere around 75 million shares. There's 300 million shares out there. So I don't think that, like, everyone's very focused on that number, like that's going to be the thing. To me, it's cash flow and it's earnings. If this company can actually become profitable, that is the real threat to short sellers. Because then they're wrong. Right now, they just think they're early, or they just have to wait us out kind of thing. And that's what's really interesting. I think this story won't go away because people are fighting on either side. There's a lot of people who think that GameStop is overvalued right here, right now, because they're a Blockbuster or they're a Radio Shack in the making. Then there's a lot of people who believe that if we just stay, if we hold on to our shares with our diamond hands long enough, that the company will be able to turn it around. But that's the key. It needs to turn it around. And the pivot to crypto didn't work. So now what? That's what we would have liked to hear from the new executive chairman today. Like any company would talk about, like, you know, the CEO, the former CEO said that they had a path to full year profitability 2 quarters ago, and now he's fired. So it's like, what is this new path? Do we know? Is Ryan Cohen just going to buy more treasuries and then offset the cash flow losses with interest payments from the government? That's possible. But like, nothing that I saw from this quarter makes me think that there's been some sort of breakthrough in how GameStop operates and how they're going to achieve profitability. And that's troubling. So it's not, I'm not saying this is a bad quarter. It's a good quarter. Better than expected EPS number. Better than expected revenue number. Growth in hardware sales. Growth in software sales. But a decrease in collectibles revenue. And collectibles revenue had been the growth driver for like 3 years now.
Yeah.
So, but you know, we were talking about it before we jumped on the stream. We've seen a huge, like, Funko Pops have, that bubble has burst. Like, whatever Funko Pops were, the popularity of them, gone. And if you've been to a GameStop in the last 3-5 years,
yeah,
half of
everywhere.
that place was Funko Pops.
Yeah.
It was like, whole wall, just Funko Pops, right? So they are getting hit by whatever that is. That's more of a secular issue, and that's something that will work out of their inventory over time. But they had a very close relationship to Funko, so I think that's something to note. Uh, yeah, and we have Neon Ninja in the chat. They didn't just spend $600 million on the wallet project. They were hiring people. They hired a sales team. Their SG&A spend went up. The people who took over as CEO and CFO in 2021, they brought on a lot of people from Amazon. They brought people on not just for the wallet project, but also for the website itself, for the store app itself. The store app is somewhat better. Uh, the website is, it could use some work still, but it's not just the GameStop wallet that they spent that much money on. I don't want to say that that's all they spent it on, but that their growth plan in 2021 cost them around $500 million to $800 million, and it didn't work. So now what? Because they took advantage of that short squeeze. They raised money when the stock was higher than it is right now, which was very smart. We've seen other companies not do that. Bed Bath and Beyond, for instance, had multiple opportunities to raise capital last year, didn't, and now they don't exist. AMC, they've taken advantage of their shareholders repeatedly and diluted them to hell. The stock has given up all of its gains from the 2021 short squeeze. That stock, I think it went split adjusted, I'm not sure, but it was like $70 and it dropped below $2 a few weeks ago. So like we've seen it elsewhere where these companies, the timing of the issuance of shares is super important. So GameStop, their management team did a good job to raise money when they did, but now it's like you have to turn this around. You can't lose.
Yeah, it's time to deliver on that end.
And that's what we're kind of waiting to see. And yeah, I agree with what Neon Ninja's saying. Like a lot of their growth is not something that they have a say in. They didn't know when Tears of the Kingdom was going to come out. They're dependent on PlayStation 5 continued growth, and I think everyone kind of assumes that PlayStation 5 is going to grow for several more years. At some point in the future, Nintendo's going to release something, and there's only going to be a few places you can buy those things. So, like, hardware is going to be something for them for the foreseeable future. I know they've gotten into, like, used phones and fixing phones and stuff like that. Maybe there's a future there for them. But yeah, like, I think the question I have is, like, what if I were an analyst on the GameStop call that didn't happen? I would ask, hey, what are you gonna do? Like, what is your plan, right? And if I just think it's not a good look that we don't have back-to-back quarters. We don't have a conference call, especially because these results weren't even that bad. Like, if you don't want to talk about your company after this kind of quarter. And and we talked about how they didn't even do a Q&A period, so it's not like they would have got hard questions. He could have just made a prepared statement, and that would have been it. So it's just kind of
It's definitely strange. I felt they bring anything prepared at all. Avoiding a Q&A session, yeah. Thought there would be some kind of statement or something similar.
Yeah, I get the disdain for Wall Street analysts. I get it because in 2023 and largely for the last 2 decades here in America, there was the repeal of Glass-Steagall, which was a rule that was created after the Great Depression to keep analysts away from brokerage firms. They wouldn't be at the same company. Now every single brokerage house has an analyst division. So like Goldman Sachs analysts say something, but Goldman Sachs traders may be doing something else. So there's an inherent conflict of interest in all of Wall Street, and that's why people don't trust a lot of those people, and I don't blame them for that. So it's like, I get why you've seen it on Tesla conference calls where Elon really is rude to analysts. Tesla's even structured their conference calls where most of the questions come from shareholders, and then afterwards there's like 5 or 10 analyst questions. So like I get the disdain for Wall Street analysts, but this is not just this isn't a message to analysts. You're telling your shareholders something when you don't even talk to them once a quarter.
Yeah.
Like, I know that he spoke at the shareholder meeting and he said talk is cheap, whatever. You still want some color on the operations of this company. You announced that GameStop Wallet is shutting down in November. You haven't said a word about the NFT marketplace shutting down. Which is just weird. How can one exist without the other, right? So it's like, I think they're trying to avoid admitting their failure there.
How the forecasts work, on that end when, you're also heading into the holiday season where you would think that some of that stuff would be more relevant, especially if you just mentioned the Funko stuff pretty much declining the way it does when those are, please stocking stuffers outside of the actual games. Like some kind of shift or answer there would be something people want to hear about.
And then just anecdotally, you can go on X or on Facebook or on wherever, Threads, and you can see people talking about how they pre-ordered something from GameStop and then it got canceled. The fulfillment side of things has not improved. And that was something that early on, when I saw Ryan Cohen from Chewy, right, getting involved, I thought that execution would have gotten much better. And we pointed out, like Donovan pointed out earlier, like same-day delivery is something that they didn't do, that they are now doing, that is better. But, like, this is same old GameStop when it comes to how they're treating collector's editions. They let
some
people
big ones
pre-order
dropping
them.
too.
Yeah, and they let people pre-order them, and then they're like, whoops, we don't have enough. And they just shrug their shoulders, and it's not a good way to treat your customer. So it's like, I would like to hear something from management about how they're going to address these things, because I don't think this company is a going concern, which is what I think short sellers believe. They believe that the company is going to go out of business imminently. I don't think that's the case, especially if they're slowing down the speed at which their cash flow is decreasing. That gives them way more runway. But I'm going to sound like a broken record. It comes back to profitability. Like, if this company isn't profitable or has no path to profitability for a full year, why would a short cover, right? Because, you have to remember, there's people that were shorting this when it was being valued at $30 billion, and now it's around $5 or $6 billion. So they're making money. They have no incentive to close out their position right now because they shorted it at an opportune time, right? There's other shorts who are definitely trapped here, who may have shorted it at lower prices, right? But if we want a short squeeze, the company has to do something about it. The other way it can happen is Ryan Cohen just gets fed up with everything and takes the whole thing private. Because, he has billions of dollars, and if the price gets low enough, he could do something like that. And that would cause a squeeze. So there's there is a way that he could do it, and he's obviously incentivized to make the stock go up in value because he owns 12.5% of the company through RC Ventures. That's different than a lot of CEOs. A lot of CEOs, the minute their shares vest, they sell them. And they're just waiting for the next ones to vest, and then they sell them, right? I do like seeing an insider who's invested in the company heavily, and I think that it's kind of weird because his position in GameStop started as an activist investor, but now he's the executive chairman. So it's like a very different motivation when you were just, okay, I own 5% of the company. If it goes to zero, so what? Now it's like, oh, I'm the chairman of the board, and I've handpicked my executives. Oh, now I fired the people I handpicked, and now I'm CEO. It's just, it's kind of concerning how he's becoming, it's like sucking him in more and more, and more of his time's going to go towards this. But yeah, it would have been nice to hear just anything at all from him about this, and I think it's just kind of strange. The stock is up on the news. This is not bad news, at least in the short term, but I don't think nothing that we got today indicates like, hey, here's the plan either. So I'm just kind of sitting here shaking my head today.
Yeah, it sounds like there's a lot more questions than answers of some of both the tradition. I mean, the options there and now, and also in terms of where they go next with the ventures that they've already had in place.
Yeah, and a year ago there was still this like very small hope that some third-party software developer in the games industry was going to adopt NFTs. I think that's pretty much dead at this point. The companies that had mentioned it were like Ubisoft, Square Enix, Sega kind of hinted at it for a hot second and then immediately backpedaled, right? Because we saw like gamers get very angry just at the word NFTs. And the idea that we needed to have some sort of insane financial system designed for in-game purchases was incorrect. Like, we didn't need that. That was... I hate when technology tries to solve problems that don't exist, and I think that was one of those things. That everyone looked at the blockchain technology, and they're like, this is good at managing transactions and doing things more efficiently or faster than cash, right? But, and, you know, having proof of stake, proof of ownership, right? Like, all of that.
Yeah.
But none of that really mattered in Fortnite. Like, Fortnite did not need this. And, like, no, I don't think Fortnite consumers care about being able to sell their emotes on an open market to somebody. Now, we've seen CSGO create a whole market around reselling different skins and stuff in the game. And we've seen how that's been corrupted, too. But it's like a case-to-case basis for these publishers with how they handle in-game purchases. But nobody wanted to have a crypto wallet to play a video game.
Not at all.
No actual gamers wanted this. And that's why, like, I've been immersed in this GameStop scene for, like, 3 years. Crypto people who play video games understand. But there's a lot of people in the crypto scene who have never played a video game, and their ideas for implementing blockchain in gaming are stupid. And they didn't work.
You got a couple examples of those for people that may not be as familiar?
I don't, like, Immutable has this game, Gods Unchained. It's like, it's a competitive card game, right? It's like a Hearthstone or a Marvel Snap, but they applied NFTs to it. So you could buy cards and sell your cards if you don't want them. Why?
We would want, yeah.
We already had a model. We had Hearthstone just sitting there. And, like, I know some people really like Gods Unchained. Like, some people think it's like... The people who like... I don't want to broadly generalize, but some of the people who like Gods Unchained, I don't think they ever played Hearthstone. Or Pokemon trading card game. Or Marvel Snap. You know what I mean? And, by the way, Marvel Snap's free. Like,
yeah, exactly.
Hearthstone's free. You can buy things in-game, but it was all about the transferability of in-game assets. I want to be able to buy a hat in Animal Crossing and sell it to my friend on a free market. It's like, no. Just unlock the damn hat yourself. Or come over to my island, I'll give you all the bells you want. Because I was addicted to mining or growing turnips and flipping them. You remember that? That was like 2020. April 2020. Did anyone remember the turnip bubble? That was the real bubble. But no, like... They were trying to solve problems that didn't exist in microtransactions. And they created these very small communities, and boy, if you tell someone who loves crypto that it's dumb, they will attack you. Fervently. And it's just like... I think it's pretty obvious at this point, though. Like, even Ubisoft didn't want to do it. And they do everything. So, like, the fact that they backed off, I think that was the death knell for this. And then the regulators came in, and they said, hey, these might be securities. And that's when the statement that GameStop made when they shut down the wallet, or they announced the shuttering of the wallet, was that they think there's regulatory risk to operating that. And, yeah. They can still slash over half of their domestic store base. Yeah. And that's been the refrain at GameStop for 15 years. Is just closing down stores, right? Closing down the non-performing stores. I used to have a GameStop within walking distance of my house. And now it's gone. It's I want to say it's like a Mediterranean place now. honestly an upgrade for the neighborhood. But yeah, we still have like 4 in Canton, right? So like there's still plenty of GameStops in the world. And if they really are serious about pivoting towards online sales, they don't need this many stores. So that is something they can do. But this is the problem here. They're pulling on this, like, it's like they have this one sweater, right? And they just keep pulling on the string, and that sweater's name is cost cutting. At some point, you're out of yarn.
Yeah.
There's no more cost to be cut. And then what? You still have very tiny margins on hardware sales, very tiny margins on software sales, and declining revenue here in collectibles right now. I still think collectibles are a future for them. I think toys, collectibles, those things that impulse purchases at a mall, right? Now, do people even go to malls anymore? Not sure. But the people who do, if you can get them to see, I don't know, a Kirby plushie in the window, and they come in and they buy that thing, that's honestly, I think, a better chance of profitability for the company than depending on hardware and software. They have to keep selling those things. They have to.
I agree with that. Yeah, I feel like there's definitely still value in people being able to physically, touch and see things. Even though we've seen some of the decline on the convention side as well, I do think that is something people take for granted at certain points, but it's kind of coming back a bit more after being kind of forced to go more of the digital route for a lot of things when it comes to ordering from like your Amazons and such, during the pandemic and stuff like that, and having less opportunity to go through different store situations. I feel like there's still room there to add value to actually being able to see and touch things or go through on the window side.
Make your stores more interesting to people, right? Like the importance of having a kiosk that kids can play games on, it can't be understated. Like the times where moms or dads can drop their kids off at GameStop and be like, "Here, play Smash. I'm gonna go to this store you're not interested in," right? There's value in that. Like, have some sort of community events built around that stuff. I know they do a good job with launch events, but like there needs to be a reason to come into the store. Because I just think that's a problem that they face specifically. Like, I don't think they use the square footage of their store intelligently.
Yeah, there's definitely room for more improvement. I mean, the fighting game end has always been kind of pushing that too. You'd have tournaments and that kind of thing for, launch week or that evening and stuff like that. But they could definitely lean into more of that too.
Because like, why do people like going to the Apple store? It's because it's like useful. You can get your stuff. You can get your stuff fixed there. You can try out every product, right? There's someone knowledgeable about the product right there,
demoing and they can show you stuff.
And like that's just not the case at GameStop. My favorite GameStop in Canton, they get robbed once a week.
Jeez,
it's brutal, and like these people aren't paid very well. If you're working behind the counter at a GameStop and someone pulls a gun on you, you're like, "Here, take everything. I don't care." Like, don't shoot me over a PS5 or whatever, or money. And that's the thing. Like, I feel bad for these folks because if you go into a GameStop, it's usually like 1 or 2 people working there. It's not. It's like skeleton crews at a lot of these stores these days. A membership pass where you can use games like GameFly. That's a good idea. Black Belt Scrub. And this is the kind of stuff I want to hear. Like, hey, yes, we realize that our current business model is not going to be sustainable. Here are some ideas. They're not doing that. And it's like, everyone's like, oh, Ryan Cohen has a plan. We're just going to trust the plan, right? It's like the whole trust the process thing with Philly. We're seeing it with him. And I get it. He's cagey. He doesn't want to tip any of his hand if he does have a good idea. But yeah, like I'm curious just where the hell they think they're going here. The Power Up Rewards Pro membership, that worked in a time where console bundles were in demand, right? A year or 2 ago, when people were still buying, it was hard to find a Series X. It was hard to find a PS5 right?
Yeah.
And GameStop's like, oh, we have them, but you have to buy 2K, COD, and Madden with it, right? So there's $180 more per ticket every time you bought a console from them. And you had to have a Power Up Rewards Pro membership to even buy the bundle. So
yeah, it was out of control.
It worked, but that's not sustainable because now supply and demand has equaled out in the console market. A lot of people who wanted those, the people who were willing to pay for a Power Up Rewards Pro membership for that right to purchase, they bought the thing, they got the thing, they're done with your Pro membership.
Yeah, so and they remember that experience too of said membership being the reason why they had the bundle and everything.
RMS says, that's what I did, Asif. I bought the bundle at GameStop. Yeah, and it was like a hostage situation.
Yeah.
Because there was like, you either don't get a PS5 for Christmas, or you pay $180 more than you should have, right? And it was unfortunate, and it was somewhat predatory. But yeah, that's how I bought mine too. I literally turned around and sold those games in the plastic back to GameStop. It's like, I don't want these. I'm like, please don't make me play.
Yeah, that was like your only experience there with the pro membership side of things. And it's like, that's all you. How do you get those kind of customers back if some demand evening out in that scenario where like the last experience they had was basically being held hostage to get the item they wanted?
Mm-hmm. And
it's not exactly building customer loyalty on that end.
That's it. You said the word, man. You said the phrase, customer loyalty. Like, their membership plan does not inspire that at all. And then when they screw up stuff like these collector's editions where they have to cancel orders, and look, it's not just them. Amazon does it too. All the time. All the time. They're either late with your delivery, it doesn't show up at all, it gets canceled. I saw this sweet deal on N95 mask. It was like 80% off. I'm like, I'm buying these. Because, hey, the world's on fire. There's a lot of reasons to have N95s. Yeah. And I was like, 80% off. I'm like, I'm in. I buy it. A week later, Amazon's like, yeah, we canceled your order. It's like...
yeah, exactly.
So, like,
but everywhere. I did have I had the opposite scenario because I barely spend any time at Walmart, but that's where I got my PS5 from. Because I signed up for their Walmart Plus membership or whatever. I had no issues. Bought 2 PS5s, bought one for myself, and then got another one for my cousin. And the entire process actually went pretty smoothly without any kind of issues.
Walmart has one of the best logistics infrastructures of any retailer.
Yeah.
Like, you can talk a lot of smack about them. And
it was their launch day. It showed up on my doorstep without any issues. They kept me in line. So in tune, it gave me a more respect for Walmart when it comes to getting something in a timely fashion that I also paid a lot of money for. Yeah. So I went into a scenario where the PS6 comes out. I might go check out Walmart Plus first because of that one interaction I used their service for, in comparison to GameStop doing the opposite.
Yeah, no, and that's the short thesis right there. Is like, how the hell is GameStop going to survive when they have to compete with the Targets of the world, the Walmarts of the world, the Costcos of the world, right? All of those companies have way better relationships with all the suppliers because they have more money. So it's like, why will GameStop continue to exist if they don't have experts behind the counter? They don't have supply of the things you want. They have a user experience or a customer experience that ends up pissing people off. And yeah, the used game market is crumbling around them. So it's like, it's a great question. I always thought that like GameStop should pivot to being like Amazon locker style, right? So there's like a part of the store where you just go there to get your stuff that you ordered online.
That would be useful. I mean, you got enough locations, and then you know what you're going there for.
Another thing I thought they should do, but then I started to research it a little more. I thought they should acquire Redbox. But then I was like, $60 games in a Redbox, people are just going to break the Redbox open and steal all that. So it's...
yeah, day one drops, that's looking like a good opportunity for You get that wiped out real quick. Especially come holiday season, it's like, oh yeah, we just give me some tools.
You think they can acquire Steam? That's the most ridiculous take of the day. Congratulations. No way in hell could GameStop acquire Steam. The world would end if GameStop acquired Steam.
What in the world?
No way. No
yeah, that's...
I did the Kembe Mutombo block that idea. No, don't even put that in the universe. That's a bad idea.
That's a scary thought. Yeah, please, no.
I agree. A better relationship with Steam, sure. Maybe you figure out some sort of way to make Power Up Rewards Pro a Game Pass like. Some kind of like, hey, you get this downloadable game. Here's Power Wash Sim DLC or something. Like if there's a way to create recurring revenue from the Power Up Rewards membership, that honestly might be their best path forward.
Yeah, they could do something kind of like Humble Bundle, where they had an opportunity to kind of work some things out with, things more straightforward. Then there's actual Steam Deck itself,
Because selling refurbished Steam Deck, how much do you think they're making on that per unit? Like $20, $50? Hard
probably
to say.
Closer somewhere in that. I'm thinking like 30.
Yeah, maybe even less. Because Steam Deck still sell for $400. I think the refurbs are selling for $350. I should just buy a Steam Deck and take it into GameStop to ask them what I can get for it, and then I could do the math from there. But then I'd have to buy a Steam Deck. But
I mean, I think whenever they get around to a new model, like there's some room for GameStop to kind of make some things work with some of that. I feel like, especially if they had locations that were considered actually a repair station or something. If they kind of had a hand in hand with Steam on that end, say that Steam seemed like it gets more successful down the line. If they actually became a place you could go to get that, turn that in and get it fixed. If you had issues, that would actually
like an iFixit. Like if they could become most of the places, at least in Canton or in Ohio, that fix iPhones, they're like mom and pop stores, right? Yeah. They're not chains. Like if GameStop could become a chain that's known for, hey, we fix your screen or we fix your console. We can do this, we can do that. I think that's important. The other thing that they've completely been devoid of, and I know they're trying to get back into it, is retro games. It's fine, complain all you want about new games and how they're available digitally. You know what's not available digitally? SNES games. I know there's Nintendo Switch Online, there's ROMs, and there's emulators. But I'm saying, if someone really wants Street Fighter 2 for SNES, it's never in stock at GameStop. There's a store in my town called The Exchange. I asked them for the most obscure game. I went in there and I was like, I want Electroplankton for Nintendo DS. They ordered it for me. 8 days later, called me up, said, hey, come into the store. I got Electroplankton. That user experience is what is missing at GameStop because they're after higher margin revenue. But what they are is a used game retailer, and what they could do, we've written stories about it. A used game from the NES era that's in box, in plastic, is worth quite a bit of money right now. That's the real collector's market. It's not Funko Pops. It's not plushies. It's games and hardware. Obscure games, obscure hardware. And I'm not saying that every store needs to carry these, but having a centralized warehouse that can fulfill those kinds of orders, I think that would be a key differentiator when you compare them to Walmart or Target or Costco.
That's true. I think that would add a level of prestige too, just being considered somewhere where you could actually get those kind of things in in good quality. I think the middleman idea is pretty good too.
That's the problem though. Is online purchases of those rare collectibles super dicey, right?
It's real sketch.
I don't trust eBay. I don't trust that stuff. So if you had a trustworthy online fulfillment center for that kind of stuff, the only equivalent I can think of is in Japan with Super Potato. They're awesome. And that's what's really weird. You go over to Japan, tons of physical software being sold. at every store. And once again, it's kind of mom and pops. It's not necessarily just one chain. But GameStop killed off all the mom and pops, and then they ruined the things that made those great. So it's like, maybe go back to that instead of complaining about disk drives and consoles, right? Like, there may be a future in retro for them.
Yeah.
And it's just, I don't think they've...
I feel like they could lean more into, like, the idea of, being a, official place for some of that too, just like the same with Steam Deck. Even for people that, even if you're not just doing the actual repairs, but if you're the middle person that people can drop their system off to you, to get shipped off to, wherever it gets fixed and brought back instead of having to do that back and forth themselves. It's a lot easier than, having to pull up and hope and pray that you get the reply back after your FedEx drop off or whatever, if you actually have.
That's what makes Apple Store a good experience, is that you go in there, they're helping instantly. I don't feel like that when I go into a GameStop, ever. It's more like, what do you want? And thank you for not robbing me. Because, like I said, in Canton, it's tough. It's probably the worst place in Canton to work is GameStop. So, like, and that, we have a lot of crappy places here. But yeah, it's just kind
of make some adjustments, man. I feel like that's I think the ideas and concepts, obviously, I mean, they've taken in the investments and stuff like that. I feel like it's just definitely a pivot would be necessary, but it's in a way that's sustainable with those kind of options, especially if you're tying yourself to these, larger companies that obviously aren't going anywhere.
My whole thing is, get a gamer in there. Put somebody who knows about video games on your board of directors. And you know who they had? They had the GOAT. They had Reggie. And Reggie looked around for 5 minutes with his new board and was like, I'm getting the hell out of here. Because they don't know what the hell they're doing.
Yeah.
Well,
that ran for the hills on that one.
That was a damning exit. Because he was only there for like 8 months or something. Like, he was there.
It was a quick turnaround.
He was there before the squeeze, and he got out like shortly after. Because he was like, these guys don't know what they're doing. And it's like, I think a lot of crypto people took over the direction of the company in the last year or two, and they timed it horribly. And no offense to crypto fans, they don't know what the hell they're talking about when it comes to video games 9 out of 10 times. Like, I'm not saying this about everyone, but I'm saying that the people who are trying to shove blockchain into gaming don't know what they're talking about. It's like, there's other uses for it than that. And it's just weird. I worked for Reggie. He's literally a puppet. Horrible, actually. I don't know about that. I don't think Reggie... Yeah, you could argue that any president of Nintendo of America is a puppet, and I will understand why you say that. But Reggie Fils-Aimé actually affected change at that company. Nintendo Wii would not have been as big of a success without Reggie. Reggie and his team suggested one thing: pack in Wii Sports. And you're going to tell me that's not a good idea? That wasn't groundbreaking and that didn't change the trajectory of Nintendo forever? Because without Wii Sports as a pack-in, do you think Wii goes viral that Thanksgiving? No. Because it was all about bowling. It was all about tennis. It was all about the golf, right? It's all about the stupid boxing game. But yeah, like, I wouldn't say that Reggie did nothing. And Reggie literally worked for Nintendo. Like, we're talking about Amazon fulfillment guy. We're talking about people who worked underneath the Amazon fulfillment guy. We're talking about the most recent CFO. She worked at GameStop herself. It's like, either get someone who's a master at logistics, right? And that's what you see with Tim Cook at Apple. Or get someone who actually has some innovative ideas for how to change the user, the customer experience at your store. And that's definitely more of a Steve Jobs-like person, right? Yeah. Like, actually make your place a destination. But, like, who goes to GameStop? Like, when you think about, like, who goes to GameStop
outside of launch day, yeah, like
kids are there. No kid has a GameStop wallet. Like, that's not. It was always this weird. They were reaching out to a different community. I get why, because they're like, hey, if we get the crypto people to support us, this is going to be very big. And it was, at the time, there were trillions of dollars of market cap in the crypto industry. So I get it. But yeah, it's just unfortunate timing, I think, on a lot of cases. But yeah, today we didn't get a single word. They in their press release they say we're not having a conference call. Just refer to our 10Q for anything commentary related. And I read the 10Q, or I skimmed it obviously because we had to jump on this. There wasn't a whole lot there. They tell you their DRS number. They tell you, hey, NFT marketplace wasn't material to results. But there's no mention of like what this new vision is. You have a new CEO. He's been there for a quarter. He hasn't said. He said one statement at the shareholder meeting, which is still people are going to and retweeting today on Shacknews Twitter, by the way. But his statement there wasn't really even anything. It was just talk is cheap. I'm results driven. You know, it's like, okay, here's good results. Good work. Congratulations on this quarter. But no color at all as to what you're doing here is just strange to me. But, you know, we'll see what happens. There's reasons that shareholders are going to be excited about today, and there's reasons that shareholders who are really hyper-focused on the direct registration of shares may be upset by the results today.
Yeah.
And as I stated earlier, I'm not in that camp that thinks that DRS is the end-all, be-all to solving this problem. Because a lot of people are fixated on the fact that in February and January of 2021, there were more shares shorted than existed. The SEC never provided data that explained how those shorts covered. So a lot of people are fixated on that. I look at the data and I'm like, okay, clearly what happened, they shut down the buy button on January 28th, 2021, right? The broker-dealers, the high-frequency traders, the market makers, they all colluded so that they could cover their shorts without exploding the entire stock market. And then they turned the buy button back on as things began to plummet, right? We haven't gotten... I think the problem is that moment showed everyone just how rigged the stock market is. And people are still pissed off about that. Rightfully so. But fixating on the past is not going to get you to the future. You need to do something about the company itself. And there are people out there who are shareholders of GameStop and shop at GameStop and evangelize for GameStop. Like, it's weird to see that kind of fervor for the company, but that still exists. There's still people out there doing that. It's become a cult stock in that sense. And then you look around at some of these other stocks that were painted as the next GME. They weren't. AMC is not the next GME. Bed Bath & Beyond, like, you got people who think they can buy the common stock of bankrupt companies and become millionaires from it. Like, that kind of delusion was born out of this, what happened with DFV and his options trade on GameStop, which is like one of the greatest investments of all time. Some of the best fundamental analysis you'll ever see from Keith Gill in the summer of 2020. It's like everyone thinks they can be Keith Gill by finding the next GameStop. But it was a perfect storm that led to that situation. And we're past that. Now it's not like we're going to wake up one day and there's going to be a short squeeze for no reason. There will be a reason if GameStop squeezes, and it's going to be fundamental. It's not going to be there were too many. There's still a lot. I think it's around 20% shorted. That's 1 in 5 shares are shorted, and we mentioned 1 out of 4 shares are directly registered, and Ryan owns 12.5%. So if you start to add things up, it's like just the individual shareholders and Ryan, they own about 40% of the company. So I get it. Like, we definitely still have control over this, but it's not on us anymore. People don't have to come out there and just buy shares every day. It's on the executives and that management team to start executing. Or at least. And they did that today. But the lack of transparency is very confusing. You know, it's just weird.
Sounds
Yeah, and we mentioned I saw the cash flow story just hit. So that's we should probably hit that before we go. But yeah, the cash flow decreased overall by $164.6 million, and I think it was something like $52 million of that outflow was directly related to them buying more marketable securities. So I mentioned they have $300 million of treasuries or whatever on the balance sheet now. There's a path forward for them where if they keep increasing their marketable securities holdings, that the interest may offset their losses, and they could turn a profit that way. That would be a financial engineering way to reach profitability. So, or maybe not profitability, but cash flow positive, which to me is more important than profitability, because my model, I own shares of this company. My model is based on, I look at, okay, how much are they burning? How long can they last with the current amount of cash they have on hand? And right now, they could probably last, if they burn the same amount, they could probably last around 11 quarters. That's almost 3 years. That's not that bad. Compared to in the spring of 2020, when the world was ending, they were not going to make it a year. They didn't have enough liquidity to make it a year, in a lot of people's opinion. So, yeah, I think that's going to be the key going forward. That's going to be one of those things that I will fixate on, is their cash balance, how they're managing their cash. And if Ryan really gets nutty this quarter, he could just buy a bunch of treasuries and get that 5+% return. That's better than he can do at any one of his businesses inside of GameStop right now. That's better. That's a better return than the hardware business is getting him, than the software business is getting him, and what the collectibles business is getting him. And definitely better than what the crypto business is getting him. So it's like, I don't know. This stock won't go away, man. Story won't go away. It just won't. I feel like I've been reporting on this thing for way too long. But here we are. And it's obvious that interest is less. People are not as obsessed with the stock as they were, because whoever you want to claim did it, but someone out there is shilling the meme stock label. Oh, it's a meme stock. And all of these are meme stocks, right? You can buy this meme stock or that meme stock. It was a false equivalency that distracted people from the original thing. If all of us actually put our money together and bought GameStop like we did in 2021 in January, we could cause another squeeze. But so many people who were of that ilk, who were willing to do that, they just got destroyed. They lost 90% of their money in AMC, or they lost all of their money in Bed Bath & Beyond, right? Or they lost money trying to trade options on things because they saw what happened with DFE, and they're like, oh, I can just buy call options and make $50 million too, right? So a lot of people with not much experience have gotten carried out on stretchers here. And Wall Street wins. The house is winning again. But yeah, it's unfortunate, because I still view myself as part of that individual investor movement, and I am all for transparency. Like, I want shareholders to be given transparency from the management as well as the regulators. And the SEC has not done enough when it comes to regulating short selling disclosures, and the effect that high frequency trading has on shorts. Because a company can trade in several milliseconds back and forth with their market maker and make a ton of money that we don't even see. We don't even see it on our regular brokerage account volume stats. The dark pools, these areas that exist that are totally controlled by like 5 companies on Wall Street. The fact that 90% of trading on the stock market any given day is done by computers with algorithms in a high frequency manner. It's like, these are the things that need to be addressed. Because like, we have 2 different tax brackets for traders, right? Long-term capital gains and short-term capital gains. Short-term capital gains means I bought and sold the stock within less than a year. So if I held a stock for 364 days and I sold it, I pay ordinary income tax. If I hold it for 366, I pay, long-term capital gains rate. Why should a trade that took 3 milliseconds get the same tax treatment as one that took a month? What value did that trade add? Like, we should be taxing high-frequency trading at, 99%. Because it doesn't add value. It's false liquidity. And it was used to screw over individual investors. So it's like, these are the things that I wish were born out of the individual shareholder movement that have been lost. Because everyone's focused on chasing the next GameStop. Or trading options and losing their money. Or just being angry because they got screwed over. It's like, no, we have actual ways to affect change here still. And I just, it's disappointing that the leadership at GameStop is ignoring their greatest asset, which is their shareholders. There's still 75 million shares directly registered. I don't care about direct registering, but that shows you there's 25% of the stock is absurdly invested in it. These are not people who are selling, right? It's no sell until no sell, right? They want Wall Street banksters to go to jail for the fraud that was perpetrated on them. Or at least we want new rules so that this doesn't happen again. Right? That's the problem. Nothing has happened to prevent what happened in 2021 from happening again. The squeeze and the buy button being shut off. Nothing has happened. There is some regulation in Europe for pay for order flow, which is the business model of Robinhood, right? Robinhood will sell you fractional shares, and then they go out at the end of the day and they tell their market maker, hey, I need this many shares. That business model is definitely at risk. And that was definitely part of the problem here. Robinhood was giving people free shares at GameStop when they signed up. That was, everybody was like, yeah, sure, why not? I'll take a share at GameStop. They didn't even have those shares, right? So I get why people are fixated on direct registration of shares, but I think that it's not, if we don't get over 300 million, there's no point in doing it. There's just not. And even if we do get there, all we've proven is what we knew all along, is that there are more shares outstanding than actually exist. There's more shares out in the world than actually exist. And that's what caused what happened in 2021. So it's 2 years later, 2.5 years later, I understand why people are still pissed off and why people don't trust the government or Wall Street. So it's just, I want solutions, Denny. That's where I'm at. I know that we're not going to get many because this is a very corrupt society. And it's not just, I've been thinking about it just from a risk management standpoint. It truly feels like in this economy, it's everyone knows that the casino's about to close. And they're just trying to make as much money as possible before it does. And you're seeing that with grifters. You're seeing that with crypto scams. You manage our social media. You see those comments. Just anytime we even mention anything, it doesn't even have to be crypto related. There's 5 people in our replies, all with blue checks, by the way, now, who are replying with outright scams, right? There's never been more financial crime going on than right now. And it's really shoddy, lying, just shady stuff going on. I wish that we had a regulator that would actually fix that and police Wall Street. But this is not unlike what we saw in the year 2000, except it wasn't Twitter then, it was Yahoo message boards, right?
Oh,
Yahoo message boards were full of shills who were hey, buy this IPO, buy this one, The year 2000 was full of stuff like that. So it's the same fervor, the same just absurd amount of risk-taking is occurring. And it's just in different, it's bubble mentality reappears. It's always just in a different asset class or a different industry, right? 2007, it was the banks. The 5 largest companies in the world in the summer of, in the United States, the 5 largest companies were all banks. Right now, the 5 largest companies are all tech. So it's like we're in that area again where we're getting everyone thinks they're going to get the next big thing. They just think that they're going to swing for a home run and hit a home run. And I am more risk averse than I have been since 2020. I went into 2020 risk averse, and I'm going into the fall of 2023 risk averse because I am concerned about the inverted yield curve, which is historically a bearish signal for the economy. And yeah, I'm worried about a lot of, like, we're witnessing climate disasters, Denny, everywhere.
Yeah.
Like, that's not going away. If you look at what's happened to the ice shelf in Antarctica, that's a reason not to be bullish of anything. If you see what's happening in the the Panama Canal right now, where there's not enough water and boats are in line. If you look at what's happening, and this is a good thing, but it might not be good for the economy. This is a good thing with labor strikes. You know, the writer's strike, the actor's strike, the visual effects people are organizing. Video game developers are organizing. Engineers are organizing. UPS drivers successfully organized and negotiate a contract. The UAW might go on strike soon. None of these things are bullish. Like, none of these things are like, hey, buy the stock of the company whose costs are about to go up. No, you don't do that. And this is not me saying organizing labor is bad. I'm saying that organizing labor is bad for Wall Street. Is all I'm saying. It's not that I am for organized labor. I'm saying that the long-term effects on the stock market will be negative, and so be it, because wages did not catch up to inflation. They need to. And they need to before they automate us all out of a job. So yeah, there are real macro reasons to be cautious right now. And I see a lot of people taking a lot of risk because they think it's easy. It's just going to come to them easy. Oh, I can just buy NVIDIA and hold on to it forever. It's like, no, you have to do your homework. You have to follow up with these companies. And GameStop is no different. Like, I think a lot of people are dependent on others doing the homework for them. Keith Gill was the one doing the homework in 2020 for a lot of people. And a lot of people kind of tagged along with him. And you look at what's happened on Superstonk, what's happened on Wall Street Bets since then on Reddit. The amount of useful information on the internet is down. And there's way more misinformation now. So they did. Clearly, the powers that be did not like that we organized a short squeeze, and they're trying to prevent it from ever happening again. But they won't, because Tesla happened. No one thought an automobile company could be spun up out of thin air and actually become the largest company in the industry. No one thought that could happen. Everyone bet against it, but it happened because they actually executed. We've seen it before. We'll see it again, but it's never. It's never easy because a company that has the condition required for a short squeeze has to have something wrong with it, right? In the case of Tesla in the past, not a single company had succeeded since Ford in spinning up a brand new American auto company, especially building cars in America, right? No one had done that.
Yeah.
So that was why people bet against them. In the case of GameStop, we've listed them off. The secular shift away from physical software towards digital, the declining margins across the board, the poor bet that they made on crypto, and just crypto in general being a weird bet. There's reasons. And the one thing that will change it is fundamental shift in the company. I sound like a broken record, so I think we should probably end soon. But that's it. I think that's my reaction to this quarter and just where we are in general. Like I said, I don't own many stocks right now. I own the least amount of stocks that I've owned in 3 years or 5 years. And some of my accounts are holding way more cash than they've ever held because I'm just, like I said, I'm risk averse. When everyone is in the pool, I'm kind of like, maybe I should get out of here and dry off. And I'm kind of the opposite though. When everyone hates something, I love to dig in and see the devil's advocate. Like, hey, Nintendo after Wii U, right? Everyone's like, oh, they're screwed. They're done. Game over, right? They should become a third-party developer, right? That's when you buy. And it's counterintuitive every time. You sell when things are going extremely well and everything's going to the moon, and you buy when everything is falling off a cliff and no one has any hope. So it's like that's where I live. I live in that.
Finding that sweet spot.
Yeah. And I think we're definitely closer to that first part where everyone's very confident and everything's going to the moon. Everything's going to be great.
Well, I feel like, we would trust you more with, going off the deep end than, these folks who are buying a Bed Bath & Beyond. So.
I begged them, man. I was like, I've had people in my DMs being like, oh, man, I'm going to make so much money off Bed Bath & Beyond common stock. Like, you have no idea. You're an idiot. I'm like, they're bankrupt. Like, they had billions of dollars of debt. And their little auction that they had only raised like $50 or $15 million or something. I'm like, you got billions of dollars of debt that needs to be fulfilled before you as a shareholder get $1. And it's just a fundamental misunderstanding of how bankruptcy works, how the stock market works. It's
people
sad
understand how profit works.
And like, GameStop got people, and I will never say that people shouldn't be in the market. It got people who were inexperienced into the market, but now they're still inexperienced. And they're just chasing the dragon, and it's like, that's not how it works. Learn to do homework. Like, learn fundamental analysis. Understand what high frequency trading is. Look at technical analysis, like looking at stock charts. Understand if 90% of trading is governed by algorithmic trading, it stands to reason that there are some sort of set of rules for these computers. Learn the rules. Use it against them. That's what I'm very pro education. I will never tell anyone not to invest. I'll tell you, hey, pay off your debt first. Make sure that you don't have a ton of credit card debt or that you have some looming bills. Once you have like a little nest egg, of course you should invest. The best thing you can do is to invest in individual companies over the long run that have solid fundamentals, a brand, a moat, But yeah, so many people think that erase the term next GME from your vernacular. It does not exist. There's no next Tesla, there's no next Apple, there's no next Nvidia, there's no next GME. They're all individual stories. Just find the next cool story, or stick with the one you're in because you believe that there's still upside. But ask yourself every day, if you own a stock, if I didn't own this stock today, would I have bought it? Ask yourself that question every day.
Also out here, preaching, have to get him, a round of applause on that one, Oh, we do have one more question there from Neon Ninja. It says, last question, let's see. With GameStop strategy struggling to just break even with losses and no new forward strategy, why do you think the stock isn't overvalued?
Why do I think the stock isn't overvalued? That is a great question. Let's take a look at some of the fundamentals, right? You're looking at a company that's going to have somewhere around $5 or $6 billion of revenue this year. They're valued at around $5 or $6 billion. That's one-time sales. That's not that pricey. Price to book, 4.6 times book value. So book value is if you liquidated the company, you paid off all of its debts, how much do you have left? So it's trading at 4.6 times that value. That is expensive. Now I want to put this in, now take as many grains of salt you want with this. Apple, I also own. The price to book of Apple right now is 49. That's 10 times the price to book of GameStop. Now, Apple has a ton of intellectual property. Their brand is clearly more valuable than GameStop's, right? Mm-hmm. But I want to point out just where we're at in the cycle of the economy in general. Another very, very high valued company, Nvidia, trades at 43 times book value and 37 times sales. So if we're just looking apples to apples, and admittedly, Nvidia is a better brand, Nvidia has intellectual property, fine. But 37 times sales versus 1 time sales. So I'm just looking at that data point. If GameStop can grow sales, it is not that expensive on a price to sales basis. That's one reason why you could say that. But like you said, they're not profitable. So you don't have a PE ratio. You cannot look at it apples to apples with other companies that are profitable. So that's a valid point. But with 1 out of 5 shares being shorted and 37% owned by Ryan Cohen and us, it's hard to ignore what's happening inside the stock. Like, they would not have been able to raise money if it weren't for the shareholders, right? That whole squeeze that happened. They wouldn't even be here today if it wasn't for that. That's when I changed. A lot of why I think it's not that it's cheap. I'm not telling anyone to buy it today. I want to say that. Like, now I did just ask if I went home with it, would I buy it here? I do. I went home with it. So clearly I want some exposure, right? But it's not, I own one stock in an insane amount of size. I have like 90% of my money in Nintendo. That is my highest conviction investment, right? My portfolio is 5-10% GameStop, right? So it's not my highest conviction position. And I don't have any call options on it right now. So I'm not gambling on it going higher. I actually have put options on it in case today was bad news because, like I said, I'm a little risk adverse. I don't want to take on too much risk right now. But at the right price, let's say that GameStop gets to like 0.6 times sales. And we think that, hey, PlayStation's going to sell well and the Super Nintendo Switch is coming, right? And Nintendo's not getting out of physical media. They're going to sell cartridges forever. Or maybe another really weird disc like the GameCube. But like, so hardware is going to come back for them. So revenue is going to be a story for them. If they can actually grow revenue and they get that recurring, we talked about with the power-up rewards or some kind of recurring revenue that's higher margin, that's when things get really interesting. So I would say that price to sales is the main reason why anyone should say that GameStop is cheap right now. But relative to the broader market, some of the hottest stocks in the universe, GameStop is not being valued at a premium to those. So it's more like we're in a very expensive neighborhood right now. The stock market is a very expensive neighborhood. Nvidia, Tesla, Amazon, Apple, right? Google. And these are all huge brands, so they deserve to have some kind of a premium, right? Like I won't argue that. But when GameStop has a lower price to book value than all of these companies, that seems kind of weird. Amazon, for instance, trades at 2.6 times sales because they're just insane. They have a lot of money. And 8 times book value. That's an example of a company that's mature where its price to sales is smaller, right? You see it with Walmart as well. So if you're looking at retailers, for instance, like Walmart, I think we could say is probably the best brick and mortar retailer in the U.S. just from a result standpoint. They trade at a discount to their sales. They trade at 0.69 times sales because their margins are very low. Their profit margins are 2.2%. Their operating margins 4%. So, because they had to kill all the mom and pop stores, Denny. Right, so they lowered their prices. All those
running into
prices.
the same thing with the retailer end. GameStop also shares with a certain extent on that end of their market.
There's an argument right there that hey, maybe GameStop should be lower. Maybe it should be 30% lower if it wants to trade at a price to sales that's similar to Walmart. But I think when we look at how much revenue Walmart has, which is like $630 billion in a year, we're talking about maybe $6 billion at GameStop. And lastly, this will be my last point because I don't want to talk about this thing. No, it's fine. They can actually grow sales. If GameStop grows sales in a way that is profitable, they will get to trade at a premium to their sales for longer. And that's not priced in here, that they could actually grow sales. Not to mention, they're a retailer in the fastest growing entertainment industry. You can add film, music, television, all forms of entertainment, sports, all of them together. And they're still less than the annual revenue of video games. So if you were going to own a retailer in any entertainment space, this is the one space to own it in my opinion. So it is a larger call about the broader video game space, right? That video games are still growing. Video game hardware is still growing. Look at Steam. Steam Deck came out of nowhere. I love that it happened. But it didn't kill Nintendo. It didn't cannibalize anything. It's a new product. It's a new product category. And we're seeing that with Game Pass. Game Pass is a new service category, right? The innovation and the growth is happening in video games. Whenever it happens, VR will be another growth engine for video games, another growth engine for software and tech. Mm-hmm. So I think there are secular growth stories happening in video games that GameStop will kind of tangentially benefit from because they're in the industry. And they already sell Oculus there, and maybe they'll sell Apple Vision Pro when they can make more than 4 of them a week. But
there's potential, potential on both ends there.
It's way harder to get in. Like, if Shacknews wanted to pivot today and become a video game retailer, I'm going to tell you, GameStop has better relationships with the publishers than we do. You know what I mean? Like, it's not like they are a trusted partner for a lot of these companies, and that is worth something. But yeah, like, do we need brick and mortar retail in general? Do we need brick and mortar retail for video games? Those are the questions that need to be answered, and we don't have the answer yet.
Well, I mean, you can feel free to keep the conversation on the Discord, and if you miss portions of it during the live stream, we do have the actual official Shacknews community there, and there is a special Money Talk channel, which I also likes to frequent. And
I'm in there.
Plenty of details about what's going down.
And it's definitely a place where we talk about stuff that is more. It's broader than the Shacknews coverage universe for finance. So if something happens with GDP numbers, or I talk about treasury rates a lot, I'm paying I don't know if you can tell, I'm pretty concerned about where the U.S. treasuries are right now. And I'm concerned about the federal funds rate. And I'm concerned about what that means for customers who have to borrow to buy things. Be it a house, be it a car, be it a credit card payment. All the interest rates are going up across the board. And the economy's not that strong. If you back out Taylor Swift and Tears of the Kingdom, this was not a good GameStop quarter. I'm just kidding. But yeah, like Taylor Swift, she's probably going to get nominated for a Do It for Shacknews award this year, just because she's carrying the U.S. economy, like hard carrying by Taylor Swift. And Beyonce.
I think I had a bit of both of those on some live TV earlier. They had Stephen A. talking about going to the Taylor Swift concert with his daughters.
I saw that. I did see that. But yeah, when Stephen A. is sitting there pounding his chest about how great Taylor Swift is, she needs some love this year. She really did something, and her show is, from all reports, sounds like her show's great. So good for her. But yeah, join us in Discord. We'll be there chatting about finance. We'll be there. It's a great place if you just want to follow all of Shacknews in one place. It is the ideal place for that.
Yeah, plenty of good conversation going down, and plenty of good conversation during the stream today.
Yeah, I appreciate you hosting, Denny, and bouncing ideas off of you. And yeah, I think this was probably a better conversation than we would have got out of Ryan Cohen anyway.
Good point.
Awesome. But yeah, we'll let did you make another Discord channel? Yeah, this is the official one. This is actually the Shacknews community Discord, Lucci. And shout out.
Yeah, just hit that link in the chat. You'll be able to join in if you're not in yet. We'll take care of you. Yep.
But good to see you, Lucci. And thanks to Neon Ninja, great questions. Is it the boat on a rising tide? Junktown, shout out. Black Belt Scrub, thank you for your questions and your comments too. Lots of good questions from the chat today, so appreciate it.
Yeah, for sure. All right, we're gonna wrap up for now, guys. But yeah, feel free to stop by the Discord and also use our awesome app Shack Pets as well. Cannot forget about the Shack Pets action. We'll roll a little trailer right now.
Awesome. Later.
Shack Pet's latest update adds 2 new gameplay mechanics to the vote and battle screens. With Cuteness Overload, players who are struggling to vote for the cuter pet picture can now abstain from making a decision. Super Swipes will allow power users to challenge 10 pet pictures with 1 swipe on the new battle screen. This is for players confident that their pet picture is cuter than any comers. Players can gain Cuteness Overloads and Super Swipes by completing challenges. The Shack Pets 1.0.7 update is out now on Google Play and the iOS App Store. So jump into the ultimate battle for cuteness today.